I've always wondered myself, why do we have to hear this every night, what the stock market is doing?
70 record closing highs so far for the Dow.
Blasting through a ceiling.
In a record-setting IPO.
Investors who have been riding the wave.
It begins not with numbers on a screen, but with a heartbeat, the collective pulse of human hope and fear. Because the stock market was never born as an abstract machine, but as a living mirror of civilization itself, stretching back to crowded European ports where merchants whispered deals over the creak of wooden ships, risking fortunes on voyages that might never return. And in those early moments, you can already see the DNA of every modern chart and ticker. Because the market has always been a story about belief, about crowds deciding what tomorrow is worth today. And as the camera pulls forward through centuries, the dusty coffeehouses of 17th century Amsterdam glow with candlelight as traders gather around the world's first public stock exchange, swapping shares of the Dutch East India Company, a corporation so powerful it could wage wars and mint coins. And here the idea of fractional ownership takes root. The radical notion that ordinary people could own a piece of global ambition. Yet even then speculation runs wild. Fortunes rise overnight. Bubbles swell like overfilled sails. And when the tulip mania collapses, it leaves behind the first great lesson of markets. Price is not value, and human emotion can inflate reality until it bursts. A lesson that echoes through time as we rush ahead to Wall Street, where in 1792, a group of men stand beneath a buttonwood tree and sign an agreement that will evolve into the New York Stock Exchange, unaware that they are laying the foundation for the most powerful financial engine the world has ever seen, an engine that will fuel railroads slicing through continents, factories belching smoke into industrial skis, and innovations that redefine how humanity lives, works, and dreams. But this engine is volatile, and by the early 20th century it roars with unchecked optimism, margin debt piling higher, newspapers declaring a permanent prosperity, until October 1929 arrives like a thunderclap, prices collapsing in cascading waves, fortunes evaporating, and the Great Depression gripping the globe, reminding everyone that markets are not just charts but human lives, jobs, families, and futures. And as breadlines form and confidence shatters, governments step in, regulations are written in the ashes of excess, and the market slowly learns discipline. Yet memory is short, and after war reshapes the world and America emerges as an economic titan, the post-World War II boom ignites a new era where stocks become synonymous with progress, suburban homes rise, pensions grow, and the market becomes a symbol of national strength. But beneath the surface, cycles continue their eternal rhythm, booms followed by busts, optimism by despair, and as decades pass the camera accelerates through the 1960s and 70s, inflation gnawing at returns, oil shocks rattling confidence, and then the 1980s explode onto the scene with neon lights and deregulation, where greed is glamorized, leveraged buyouts dominate headlines, and computers begin to hum quietly in trading rooms, foreshadowing a revolution that will soon transform markets forever, because technology does not just speed up trading, it changes its very nature. And by 1987, the world witnesses Black Monday, a single day where markets crash with terrifying speed, revealing how interconnected and fragile the system has become. Yet it survives, adapts, and surges into the 1990s with unprecedented enthusiasm for the internet, a promise of infinite growth. And once again valuations detach from fundamentals as dot-com startups with no profits soar, the Nasdaq becoming a monument to speculation, until reality reasserts itself in 2000, wiping out trillions and teaching a new generation the same old lesson. Innovation does not abolish gravity, and still the market marches on because it always does, absorbing shocks and rewriting narratives. And then comes the housing boom of the early 2000s, where cheap credit and complex financial engineering convince investors that risk has been conquered. Mortgages are sliced and sold like alchemy, and ratings agencies bless them as safe, until the illusion collapses in 2008, triggering the worst financial crisis since the Great Depression. Banks teeter on the edge, governments unleash unprecedented bailouts, and the public watches in disbelief as the invisible machinery of finance suddenly becomes painfully real. And from this chaos emerges a new market era defined by central banks wielding extraordinary power, interest rates pinned near zero, liquidity flooding the system, and asset prices climbing relentlessly, giving birth to the longest bull market in history. A market that trains investors to believe dips are temporary and rescue is inevitable. Yet under this calm surface, structural shifts are reshaping everything. Algorithms now execute trades in microseconds. Passive investing funnels trillions into index funds, and social media compresses information cycles from days to seconds, turning sentiment itself into a tradable force. And as we approach the present day, the stock market becomes a global stage where geopolitical tensions, pandemics, technological breakthroughs, and cultural shifts collide in real time, where a virus can erase years of gains in weeks and stimulus can restore them just as quickly, where retail traders armed with smartphones challenge hedge funds, where memes move prices, and where valuation debates rage louder than ever, because the fundamental question remains unchanged across centuries. What is a stock really worth? And the answer is never simple, because value is a story we tell ourselves about the future, grounded in earnings, growth, interest rates, and risk, yet filtered through psychology, narratives, and power structures. And to analyze the stock market is to analyze humanity itself, to dissect earnings reports while listening for fear in volatility indices, to study balance sheets while watching crowd behavior, to understand that bull markets are born in pessimism, grow in skepticism, mature in optimism, and die in euphoria, and that bear markets follow the inverse path, crushing excess and sowing the seeds of the next expansion. And as the documentary lens lingers on traders staring at screens, retirees checking portfolios, entrepreneurs raising capital, and governments watching indices as proxies for stability, the market reveals its true nature as a feedback loop between confidence and capital. A system that rewards patience yet tempts speculation, that punishes complacency yet thrives on risk. And the analysis deepens as we examine sectors rising and falling like tides, technology dominating indices as data becomes the new oil, energy oscillating with geopolitics, financials tethered to interest rates, and emerging markets offering growth laced with volatility. And through all of this, one truth persists. The stock market does not move randomly, but neither is it perfectly predictable. It is a complex adaptive system where information, incentives, and emotion interact, creating patterns that can be studied but never fully mastered. And this is why market analysis is less about certainty and more about probability, less about prediction and more about preparation, because every chart is a record of collective decision-making, every correction a test of conviction, every rally a reflection of hope. And as history shows again and again, those who survive and thrive are not the ones who chase every surge, but those who respect cycles, manage risk, and understand that time is the market's most powerful ally. And as the camera pulls back for the final time, the stock market stretches out like a vast, restless ocean, waves of capital rising and falling, carrying dreams, fears, innovations, and failures across generations. And the analysis concludes not with a forecast, but with a realization that the market is never finished, never complete, always rewriting itself with each trade, each headline, each belief. Because as long as humans imagine a better tomorrow and are willing to bet on it today, the stock market will remain the ultimate stage where the future is priced, contested, and endlessly debated.